Always keep an eye on ore with a fresh government report showing Australia is set to log a record $136 billion from iron ore exports this year as the global recovery in steelmaking continues. For more, Peter O'Connor joining us live from Shaw and Partners. Peter, good afternoon. All right, so yeah, let's take a look at, I guess, particularly those exports as far as Australia is concerned. I mean, it's still looking pretty good, isn't it, despite perhaps a bit of a pullback just recently in terms of the price?
It does. The Australian exports look very well supported, not least because of iron ore, but also the rising copper price this year, gold price late last year, and even coal prices coming off their cycle floor. Last year in September was steaming coal price having doubled as well, so it's quite a buoyant backdrop if you're the government looking at your export revenues and royalties, etc., and taxes coming through. My concern would be looking out what happens from here. And if I was to say to you that at current spot prices of iron ore, almost the entire amount of revenue we earned in the last year from iron ore could disappear. And that's something the Australian government and the Treasury need to be very aware of on a 5-year view, that the iron ore price is not likely to stay where it's currently at. We've talked about that before on different crosses. And that trend lower, albeit it may be over a period of quarters or years, it's still something that begs a lot of thought about what that means for Australia, the currency, and also the industry as well. But great numbers today, great numbers for the current financial year. But again, taking a multi-year view, again, that iron ore number doesn't go to zero, but the amount of money they made this year versus current spot price, there's a lot of that's given back.
Peter, how much does the relationship with China have to play in those price targets? Obviously, you know, at the other end of the spectrum, we had Treasury wines affected by those tariffs coming out of China, and trade relations continue to wane between the two countries. So how much does that relationship play out in that iron ore market?
It really comes down to the exposure or the degree of exposure that you have to the market. And if I could sum it up by saying it is best to be long what China is short, and best to be short what China is long. And on that basis, it means that iron ore is quite a well-based industry, given how much we produce, but more importantly, how much China consumes of what we produce. That's key at the moment. So on, again, a 1, 2, 3 year view, that's well supported and well founded. And going forward beyond that, that volume base should stay there. It's just a function of where the next ton of supply comes from. And that's the issue that was raised in the release today about West African supply in iron ore and what that could be in the medium term. And that's where volume may still be there for Australia, but price may not be there, as the Chinese incentivise new production out of the likes of West Africa, be it Guinea, Ghana, Cameroon, and that sees price revert to a more normal level, perhaps 1/3 of what it's trading at today. And that's the dilemma we face. So in terms of iron ore, it looks okay right now, short term. Medium term, it looks okay from a volume perspective, but price will revert. Areas which clearly have been more vulnerable in the short term, the coal space, steaming coal, but also coal for steelmaking, metallurgical coal. Steaming coal seems to have cleared that burden or that headwind over the back end of last year and is now being priced across Asia more regularly. But metallurgical coal is caught up in this weird twist at the moment where the price of coal being sold across the market from Australia just does not reflect what it is worth. And even with a pullback in Chinese coal price for steelmaking, which peaked at about $275 last year, it's now back about $180. Australian coal selling for about $110 at the moment, the same coal, same type, same market. And that spread is just extraordinary. So that's an area where that very current headwind just doesn't seem to be moving. But beyond that, rare earths is clearly a space that we need to think long and hard about. China's very long rare earths, or part of the rare earth complex. What does that mean going forward? We're buoyed by the fact that the American government and other governments are looking at diversifying supply away from China. But again, that key rule of thumb, if you're in an industry where China is short and needs you, i.e. iron ore, it looks okay. If you're in an industry which is well supplied, like steaming coal or metallurgical coal, it's a little bit more challenging.
All right. Hey, Peter, thanks very much for that. Thanks for joining us from Shaw and Partners.